Uh, Yesterday I shared now that PPT, ma'am, in
Yes.
screen. You sent in a chat box, madam.
Okay.
From block one to now this block.
Okay.
Very convenient to read and important
No,
questions
that is
also.
what I'm telling you. You are not understanding me.
Uh,
Our PPTs will not be helpful for you for your exams. You will have to depend on your study
on.
material that university gives you.
Okay.
Don't depend on the PPT. This PPT is a very short form of those units that we are telling you.
Okay.
If for your exam, you have to depend only on the study material that the university gives you.
Okay.
Yeah. Okay. So coming back, uh, um, so I told you Unit 12 and Unit 13, these two topics we'll be handling today. Unit 12 is microfinance and Unit 13 is retail banking. So let us first come to microfinance. Okay. What exactly is microfinance? Uh, uh, the the reason for microfinance, the origin for microfinance, let us try to understand that a little bit, right? See, how to eradicate poverty, how to, empower the underprivileged, that has been the primary concern of the governments, not just in India, but everywhere else across the globe. So poverty eradication has been the primary concern of the government. Now, um, these poverty eradication efforts through the government driven schemes, they only produced suboptimal results. Uh, they did not reach the target that they actually had to reach. So, in order to get effective use of these programs, there were alternative arrangements that were to be made for provision and delivery of credit to the rural poor, to the underprivileged who are living in the urban areas. So the failure of the formal credit institutions in meeting the credit requirements of the underprivileged and the poor, that has been a major reason for innovations in microfinance. Okay. So the history, is microfinance a new concept? No. The history of microfinance can be traced back to the middle of the 1800s. So during the 1800s, the benefits of there was a theorist called Lysander Spooner. He wrote about the benefits of small credits to entrepreneurs and farmers, and he stated how these small credits to entrepreneurs and farmers can get them out of poverty, can pull them out of poverty. Okay, and later, the first cooperative lending bank, it was founded independently by a German called Wilhelm Raffinsen. Okay, so that is how old the concept of microfinancing is. But the term microfinance as such was not used then. Now, this term microfinance was first used in the 1970s during the development of the Grameen Bank of Bangladesh. Right? So, who developed this? Who founded this Grameen Bank? This Grameen Bank of Bangladesh was founded by the microfinance pioneer Muhammad Yunus. Muhammad Yunus was a microfinance pioneer. Um, so in 1976, what Muhammad Yunus did is he institutionalized the approaches of microfinance uh, by establishing or by establishing this Grameen Bank. So see what happened is in developing countries like India and all these South Asian countries, a large number of people still depended on farming. A large number of people still depended on the basic food trade for their livelihood. So these small agriculturists, these small farmers in these developing countries, they had to be supported by significant resources, right? Coming to India, microfinance in India is a financial institution that makes small loans to persons who do not have access to traditional banking services. So if I want a loan of rupees 1 lakh, maybe I can approach SBI, I can approach Canara Bank, and things like that. But there could be people who need money, but they cannot approach the traditional banking services because of a variety of reasons. Maybe because their income levels are very low, maybe because they do not have collateral, maybe some of them might not even have a proper bank account, they must be not having a credit score. So there could be so many reasons. So microfinance institutions are those institutions which give small loans to these people who cannot access the traditional banking service. Now, what is small loan? The term small loan is defined differently in different nations. In India, any loan amount of rupees less than 1 lakh is treated as a small loan. And microfinance institutions in India have significantly developed over the last 2 decades. And according to a recent survey, these microfinance institutions in India, they cater to almost 100 million people. That is, 100 million underprivileged people have accounts with these microfinance institutions. Actually, uh, like I told you, in Bangladesh, it was in 1976 that with the establishment of Grameen Bank. In India, this whole institutionalization of microfinance began in 1974 in Ahmedabad, Gujarat, by a person called as Ela Bhatt. Right? Now, what she did is she initiated Seva Cooperative Bank. Okay? She initiated Seva Cooperative Bank, which is one of the first modern day microfinance institutions of the country. Even NABARD, 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 NABARD. The NABARD is National Bank for Agriculture and Rural Development. Now, this NABARD offered financial services to the underdeveloped people, especially women. So even NABARD also contributed towards microfinance since the very beginning, right? What NABARD did is NABARD later decided to experiment with a very different model, which is now popularly called as the self-help groups model. What is that self-help group? We will discuss. We will talk about models of microfinance later in the class. Then we will talk about it, right? Right? So even in 2013, right, the Grameen Capital India, what it did is it provided amount of almost like $150 million to the various microfinance groups. Then there was another microfinance organization called Equitas, which developed in Tamil Nadu. Now, whenever we are talking about microfinance, we need to know about a central government initiative called Mudra. Okay, Mudra, MUDRA. What is Mudra? Mudra stands for Micro Units Development Refinance Agency. Right? So what is this Mudra scheme? This Mudra scheme, it aims to refinance collateral-free personal loan of up to rupees 10 lakhs. Right? I told you, see, why do some people have problem? Why can't they approach traditional banking systems? Because they might not have a collateral. So this Mudra is a scheme where it aims to refinance collateral-free personal loan of up to rupees 10 lakhs, which are granted by lending entities to non-corporate small borrowers. Non-corporate means not to organizations, to individuals, right? And usually, what is the objective behind Mudra scheme? Mudra scheme helps, tries to improve the revenue growth actions in the non-farming sector, right? So presently, the loans that are granted under the Mudra scheme, they fall under three categories: the Shishu loans, the Kishore loans, and the Tarun loans. Right? So Sishu loans are up to rupees 50,000. Kishore loans are between 50,000 to 5 lakhs, and Tarun loans are from 5 lakhs to 10 lakhs. Right? And in order to make the Mudra scheme popular, what the government of India plans to do is it plans to set up a 3,000 crores credit guarantee fund. So, what this credit guarantee fund does is it acts like a backing to all these various loans that are given, right? But this Mudra scheme faced a few problems, like most of these lending institutions didn't maintain a proper database, okay, and many a times what happened, the social objective was overlooked, like in the in search for growth and profitability. um, the basic concept of the basic social objective was being overlooked, so that was one problem, right? Coming to the objectives of microfinance, what are the objectives of microfinance? See, the objectives of microfinance are to transform into a financial institution that supports the development of sustainable communities, the small communities, the marginalized communities, the underprivileged communities, development of all these communities. So, microfinance, the objective of microfinance is to transform into such a financial institution that works towards the development of these small and underprivileged communities. Right? And the next objective of microfinance is to assist in the supply of resources that again benefit these underprivileged sections of the society. Now, in this aspect, women are given special attention, right? Now, you must be wondering why. See, whenever we talk about microfinance, microcredit, you would see that women are given special preference. The reason why women are given special preference in these microfinance or microcredit schemes is, the data shows that women are rarely defaulters. So women borrow money, they make sure that they repay it back, and data survey also shows that the money that women borrow, they genuinely use it for generating income for themselves and their family. But see, what happens at times is some people might borrow loan and from microfinance without collateral at a low rate of interest and all that, but they might be using it for some non-productive use. They might just waste off that money. But what survey shows that women are not like that. Whenever women are borrowing, they are actually using it for the benefit of their families. So, see, if individual families keep developing, what happens ultimately? It is a society that is developing. So, the basic objective of microfinance is the upliftment of the society. So, which is therefore women are given special preference. Another objective of microfinance is to examine the choices that are available uh, to make sure that a faster eradication of poverty happens. Poverty eradication is a primary objective of microfinance. And another objective is to encourage the underprivileged people to start their own businesses. See, people feel that if you have to run a business, you have to be rich, right? Sometimes people have talent, people have the potential, people have very good ideas to undertake business of their own. But because of lack of capital, because of lack of loan generating capacity, they stop themselves. So what microfinance does is it tries to encourage even these people to start their own businesses. Then another objective of microfinance is to empower the rural population, right? Rural empowerment of rural population, by upgrading them, by teaching them such skills which they can use to start their own enterprises and which they can use to earn money. Like beekeeping skills are taught to some villagers, right? Jute, making jute bags is taught to villagers. All these things are taught to villagers, so that they they don't depend on, they don't look for jobs, or they don't go out, leave their villages, they go in search of jobs. So people are encouraged to stay where they are, start their own enterprises, and still earn money, right? Now, how are microfinance services provided? Who provides these microfinance services? So there are various sources that provide these microfinance services. And these sources include formal institutions like rural banks or cooperative banks, the Telangana State Cooperative Bank, and all such kind of institutions. Then there are semi-formal organizations, which are usually NGOs, non-governmental organizations, right? Then informal sources like sometimes small-scale lenders from shopkeepers, right? They also could be providing this microfinance. But uh, but we actually are talking about institutional microfinance, right? We're not talking about individuals. We're talking about institutional microfinance. So this institutional microfinance consists of both formal as well as semi-formal institutions. Um, so, so what are the various components in institutional microfinance? Commercial banks, credit unions, NGOs, that is non-governmental organizations, then some specific sectors within the public sector banks, then cooperatives, right? These are the various mm, institutions that are providing microfinance, right? Now, these institutions, they not only offer microcredit, but they also offer some other supplementary financial services like, insurance, savings, awareness of savings, remittance facilities. All these things also they provide. And apart from these financial services, sometimes they also provide non-financial services like training, counseling, right? Support for the borrowers. All these non-financial services are also provided, right? So they provide credit, they provide supplementary financial services, and they also provide non-financial services. Now, borrowers have the one basic advantage in microfinance or microcredit is that, borrowers have the flexibility to determine the interest rates based on the loan purpose and their own financial history. And even the repayment schedule also can be decided. Right? The next topic that we need to look at is what are the major features of microfinance in India? Okay, so these the major features of microfinance in India are the borrowers typically come from economically disadvantaged background. So, take for example, there is a government officer. A microfinance institution would not lend money to him. It should not, because microfinance institution is for the economically disadvantaged or the underprivileged people. So the borrowers for microfinance institutions come from economically disadvantaged borrowers. So these microfinance loans, they are usually for small amounts. They're not for huge amounts. And the repayment, obviously, because the amount is small, the repayment is also usually short. And these loans, they do not require any collateral. No collateral is required for these microfinance loans. And one more important thing, the primary objective of most microfinance loans is to generate income. So, for example, I need loan to marry my daughter. Microfinance institutions do not cater to such kind of loans. Why? Because this is not an income generating activity. Whereas, I need loan to manufacture some jute, to buy raw material to manufacture some jute bags or some paper plates or some leaf plates, something like that. So most of the microfinance loans are for such kind of things, right? Okay. So yeah. Coming to the structure of microfinance in India, right? The most common form of microfinance institutions in India is a self-help group, right? So what is a self-help group? A self-help group is a collection of people who share similar socio-economic backgrounds. That means similar social background, similar financial or economic background. Self-help group is like that, right? So now these small business owners, what they do is they all come together for a limited time to form a shared fund, some common pool, shared fund. It is called as a corpus fund for their mutual business needs, right? So these and most of these businesses are non-profits, and Again, like we discussed earlier, this type of group, the self-help group, it does not require any kind of collateral. And another feature about these self-help groups is most of these interest rates, they are often lesser than the traditional banking system. Sometimes some banks also, they have partnerships with SHGs in order to increase the financial inclusion in the country's rural areas. Right? So that is about self-help groups. So usually these members, they are called as micro entrepreneurs, small time entrepreneurs. Right? And these micro entrepreneurs or these SHG members, they usually depend on the collective knowledge and peer pressure in order to ensure proper credit use and timely repayment. See what is happening. They're all known people. They all come from similar socioeconomic background, maybe from the same locality, same region, or doing the same kind of business. So they all know each other. So credit repayment becomes easier because people do not default out of peer pressure, right? Because they are all in the same community, so they don't repay the loan, it is like an insult to them. Right? Then the next one is a joint liability group. So a joint liability group is an informal association of 4 to 10 people who collaborate, who come together to apply for bank loans, either individually or collectively, and they provide mutual guarantees. They provide guarantees to one another, right? These loans, they are typically used for agriculture or other such related operations. So, who could be the borrowers? The borrowers could be farmers, the rural workers, the rural tenants, all of them. And because all these people, they provide mutual guarantee, every member is equally liable for the timely repayment of the loan, right? Then, so this is about the joint liability group. Then you have then you also have something called as the Grameen Model Bank. So this Grameen Model Bank uh, was actually established in Bangladesh, but in India, this Grameen Model Bank concept was used to establish the regional rural banks, RRBs they are called as, right? So the major goal of this approach is to help the rural economy, right? So that is the Grameen. There are a few more models we will discuss. But before that, let us try to understand some of the challenges that are faced by microfinance institutions in India. Some of the challenges faced by microfinance institutions in India. Okay, just 1 minute. Okay. So some of the challenges faced by these mutual fund institutions in India. The first one is geographic constraints. See, 60% of mutual fund institutions, what problem they experience is they find it difficult to engage with the clients in remote places. There's still many places in India where you cannot reach, which are very remote. You don't have proper rail structure, road structure there. So even if a microfinance institution wants to grow, wants to expand, wants to cater to people in that area, they find it very difficult to do so, right? So geographic constraints is one of the major problems. And then these microfinance institutions also uh, have, scalability issues. See, what happens is the smaller microfinance systems sometimes they struggle to maintain the profitability and performance. Why? Because, see, there is a very strong growth rate that is seen by bigger financial institutions. So, in such a situation, microfinance systems sometimes become very difficult to maintain. Then, see, these microfinance institutions have to cater to diverse business models because India is a diverse country. So there could be one when we're talking about rural population, but rural population all across India is not alike, and the needs of the rural population all across India is also not alike. So these microfinance institutions, if they have to support different types of loans with different features, with different repayment schedules and all those things, it becomes very, very complex and expensive. The next thing is these microfinance institutions, they have a very significant transaction cost burden. The transaction cost is very, very high because they're operating on a small scale. Then they also have to deal with safety and KYC issues. See, the customers who are served by these microfinance institutions, they frequently need more official identification or the ability to provide actual security because it makes it extremely difficult for the institutions to offer banking services without any official identification. It becomes very difficult for them to offer banking services. And most of these microfinance institutions, budget constraints are also a major problem. They are unable to make big upfront investments because of lack of funds. Right? And the largest problem that is confronting this microfinance industry today is the tendency of the borrower to over borrow more. So they want to borrow more than they need, or they want to borrow more than they can repay. That is also one problem. Sometimes, these microfinance institutions, though they have been very profitable in India, they have faced some laws and some politics that have actually been detrimental to their own growth. And one more problem with microfinance institutions is microfinance institutions focus more on the rural poor. But what about the urban poor? It is not that the economically weak or the poor population only resides in the rural areas, and in the urban areas, in the cities, everybody is rich. And no, it is not like that. Huh? So poverty is there in rural areas as well as in urban areas. But these microfinance institutions, they usually overlook the urban poor. And loan default is also a big challenge, right? So risk management is very ineffective in microfinance institutions. Okay. So the next thing that we need to look at is the growth of microfinance. How should the microfinance grow? How can the microfinance grow in India? What is it that can be done so that microfinance grows in India? So the first thing is the role of RBI. What is it that the RBI can do? See, the RBI should encourage all institutions all these microfinance institutions to monitor their impact on the society by means of a social impact scorecard. Social impact scorecard. That means to what extent are they having the positive impact on the society? See, it is not appropriate to evaluate a microfinance institution in terms of its profitability, because profit is never the motive. How should these microfinance institutions be evaluated? They should be evaluated in terms of the social impact that they are making. Okay. Next thing is, these microfinance institutions, they should ensure that the purpose for which the loan is taken from the customer, the purpose for which the customer is asking the loan, whether the customer is using that money for that purpose or not, that should be verified at the end of the tenure of the loan. So I cannot take a microfinance, I cannot take loan and then buy gold or jewelry or something like that, right? Microfinance is loans are for income generating purpose. So I have to take loan in order to generate income for myself and people around me. Coming to the benefits of microfinance. Okay. See, the benefits of microfinance, when we are talking about benefits of microfinance, um, um, the biggest beneficiaries are the small entrepreneurs. See, these small loans, they enable the entrepreneurs to start or expand small, medium, or micro enterprises. These savings, they help the family to build assets, to build a house for themselves, to pay their children's fees, to maybe improve their homes. Like, families who don't have a proper toilets, they install toilets. Families which don't have running water facilities, or families which don't have a pakka roof on, they could be doing all these things, right? So, the benefits of microfinance are not just for income generation, not though that is the primary thing. The direct benefit is income generation, but what it is also trying to do is, it is trying to improve the quality of life of these underprivileged people by generating income for them, right? And one more thing is, microfinance, it allows people to take loans safely and in a manner that is consistent with ethical lending practices. See, if somebody needs money and they go to a local money lender, they might charge a very high rate of interest, and might resort to unethical practices also, right? Uh, so what this microfinance does is, it helps the micro entrepreneurs to become big, to increase their scale of operations. Now these small or micro entrepreneurs, now they can employ more laborers, they can use better technology, and they can work on a larger scale. See, for example, I told you, take for example, I'm a woman living in a rural area, manufacturing jute bags. Earlier I used to do it all by myself, but when there is an institution which is willing to lend me money to increase my business, now what I would do is, when I increase my business, I would need more people to help me. So maybe I would hire one more women from my locality, from my neighborhood, who would help me in this manufacturing process, and in turn I would pay her some salary. So what is happening? I am I am getting an opportunity to generate income for myself. I am also generating income for one more family, right? So that is the biggest advantage of microfinance, right? See, first generation entrepreneurs are get a lot of help because of this microfinance, right? So, commercial banks, credit unions, I told you, one more thing is microfinance makes future investments possible. Microfinance makes more money available to the poor sections of the economy. So apart from financing the basic needs of these families, like I already told you, it provides them credit for constructing better houses, improving their healthcare facilities, and exploring better business opportunities, right? And majority of the microfinance loans provided by these microfinance institutions, they are offered to women, right? Like I told you, when income generation for a woman is like income generation for a family. And one more thing that apart from income generation and all that, microfinance also inculcates the discipline of saving. See, when the basic needs of people are met, they are more inclined to start saving for the future. See, I don't have money to meet my basic needs. Where is the question of me saving? When will any person think of saving? Only when their basic needs are fulfilled. So it is very good for people living in the backward areas to inculcate the habit of save, right? Even then health improves. See, when people are um, when people participate in microfinance activities, they are more likely to receive better better food, improved nutrition, better healthcare. So what this eventually does is it eventually leads to the growth of the community. Okay, growth of the community in terms of economic value. And microfinance also contributes to the education of an economy. See, one thing that you have to notice is that families that benefit from microloans, they are more likely to provide better and continued education for their children. See, whenever you see a child who has dropped out from school or college, mostly the reason would be because the family is not able to provide them loans. The family is not able to provide for their fees. So when a family is able to meet its basic needs, when a family is generating money for itself, definitely the education levels of the children of that family also would improve. So it is nothing but improvement in the family finances implies that children would not be stopped from going to school. So mostly school dropouts, the main reason is monetary reasons, financial reasons. Why would any child drop out of school, or why would any family not send their child to school? Only because of lack of money. So if if we have to name a few microfinance companies in India, Equity Small Finance Company is one microfinance company. Fusion Microfinance, Annapurna Microfinance, Arohan Financial Services. Then you have Bandhan Financial Services. These are all top microfinance companies in India. In fact, Bandhan Financial Services has now come up with, now they have a commercial bank also, Bandhan Bank, they call it. So the motive, then, yeah. Okay. So we've seen functions of mutual fund, microfinance institutions, and all that. But how are these microfinance institutions funded? Right? If they are lending money, where are they getting this money from? Right? Let us try to understand that. So these microfinance institutions, they get funding from several sources. Right? They get funding from several sources. The first basic source is the member and customer deposits. Most of these microfinance institutions, they are organized as cooperatives. They are organized as mutual funds, where all the members contribute, where all the members share towards the fund. So this fund is again used to lend money to the needy people. Right? Next one is subsidies, grants. Grants are these microfinance institutions. They could get subsidies and grants from government or big business houses, philanthropists. That also could be a main source. Sometimes these microfinance institutions could also take money from partner banks. See, sometimes microfinance institutions partner up with banks also. So in such case, they could be getting loans from their partner banks. Right? Then um, sometimes they get money from public investors. Sometimes they get money from private investors also. Right? Now, if we have to understand the approaches, the Indian microfinance sector is dominated mainly by two operational approaches. Right? One is the self-help groups, and the other one is microfinance institutions. So, what are these two approaches? The first approach is popularly known as the SHG bank linkage model, right? SHG bank linkage model. So this model is the dominant model. This model is the dominant model. It is initiated by the NABARD through the SHG bank linkage program way back in the early 1990s. So today the SHG model also links the informal groups of women to the mainstream system. And as of today, this SHG bank linkage model, it has the largest outreach to microfinancial clients in the world, right? So this second approach, which is also called as financing through microfinancing institutions, this is the emerging model, right? SHG bank linkage model is a very old concept. It started somewhere in the early 1990s, but this microfinance institutions approach, this is a more contemporary model. Uh, Early 2000 something, during that time, this model emerged, and the primary objective of this model is to gather social and commercial funds that are available for open lending to clients. Right. So today in India, there are over 1,000 MFIs, right? And these institutions, they assume the responsibility of making available the much needed microcredit to the poorer sections of the society, right? So generally these MFIs, NGOs, they take on the additional role of financial intermediaries. So what are the key differences between microcredit and microfinance, right? See, microcredit refers specifically to the practice of providing small loans to individuals or groups who might not be having access to traditional banking services. Whereas microfinance, it encompasses a wider range of financial services, not just providing loan, but also savings, insurance, and things like that. Um, and microcredit is typically provided to individuals, whereas microfinance, it could be provided to individuals as well as groups. And then microcredit is often used for short-term goals, uh, whereas microfinance could be used for both short-term as well as long-term goals. And microcredit loans are usually unsecured, whereas microfinance loans, they may be secured by assets because they are for a longer period. And one more thing is, commercial banks, they do not provide microcredit. Microcredit is always provided by non-governmental organizations or microfinance institutions, whereas microfinance can also be provided by commercial banks and other financial institutions. Right? And the primary objective also, see, microcredit is considered as a poverty reduction tool primarily. Primarily, microcredit is considered as a poverty reduction tool, whereas microfinance aims for things higher than that. It aims to provide financial inclusion, right? It aims for poverty alleviation, things like that, right? Okay. So yeah. The next topic is retail banking. So what exactly is retail banking? That we need to know. Okay. So retail banking is also known as consumer banking or personal banking also. It is a financial services that is provided to individuals and not organizations or not enterprises, right? So individual customers, they can use retail banking to manage their finances, obtain credit, and they can deposit their money. So retail banks provide all these services as like lending and borrowing money, mortgages, personal loans, credit cards, and all these things, right? Uh, while these retail banking services are available to the general public, corporate banking services are available exclusively to small and large businesses, right? So some of the features of retail banking are, see, these retail banking, they include a lot of different financial services and goods that have been tailored to meet the requirements or needs of individual customers. So some of their features are consumer focused services. See, retail banking is a type of banking that focuses on giving financial services directly to the people. So people can use this either for their personal needs or for the personal business needs also. Then the next feature of retail banking is the basic banking product. See, there are so many basic banking goods that retail banks offer. Um, like savings accounts, checking accounts, certificates of deposits, all these things. Then consumer loans like home loans, car loans, personal loans, student loans, number of different types of consumer loans. These retail banks are
Madam, which topic you are saying, madam?
retail banking.
Acha, unit 13, ah.
Yes.
Okay, okay. You are going fast, that's why I didn't.
Okay, because I have only 1 hour time now, I have to go fast.
Okay, madam. Last Sunday is the
Yes.
next Sunday is the last class, I think.
Yes. Next Sunday is the last class.
And give before important questions, madam, from block
No,
one to.
important questions I cannot give. We are not supposed to give any important questions. Whatever study material you got from university, you have to study from that.
Oh. Which topic, madam? Now you are saying unit 13.
Retail banking. I'm talking about retail banking,
Okay, introduction.
right? So,
Yeah.
coming to importance of retail banking. So, why is retail banking important? Retail banking is important because it is a basic part of the financial system, right? It is a basic part of the financial system that helps people uh, and helps the economy grow, right? So some of the important reasons why retail banking is important is financial inclusion. Okay, so retail banking is very important for financial inclusion because it gives a lot of people access to a variety of banking services. It makes sure that everyone, no matter how much money they make, they should get access to basic financial goods like loans, saving accounts, payment services, etc. Then coming to customer relationships. See, retail banks, what they do is they build and they keep very close ties with individual customers. Now, this personalized method, what it helps is it helps you figure out what the customer wants, what do they need, what is it that they have require in order to achieve financially. So, it is only possible for retail banks to customize goods and services according to the needs of their customers. What it does is it helps build trust and loyalty, and it leads to long-term customer relationships. Right? Then the third important aspect of retail banking is the growth of the economy. Right? So retail economy, the retail banking, it helps the economy to grow by making it easier for people to spend money. It becomes easier for them to trade and to start their own businesses. So people can make big purchases. They can start their companies. They can put money into education. Uh, they can avail personal loans, mortgages, credit cards. All these things are possible. So all these things not just help the individuals, but they also help the economy to grow in the long run. Right? And another important aspect is retail banks are also an important part of the payment system, right? Because they offer services like debit cards, net banking, and all these things. So this infrastructure, it makes sure that these financial transactions, they go on smoothly in an economy. So it is easier for people as well as organizations also. Another important aspect of retail banking is retail banking also contributes towards wealth accumulation, right? See, individuals can build wealth over time with the help of retail banking. Customers can accumulate wealth, they can become rich, they can plan for the future, they can get their finances in order because they have so many options like savings account they have. They have something like recurring deposits, fixed deposits, investment options are there. All these things are possible. And retail banking also helps in risk mitigation, reduction of risk, because retail banks also offer insurance products. Right now, these insurance products, what they do is they help the people handle their risks, reduce their risks. So, retail banks provide life insurance, health insurance, uh, general insurance. So all these act as a safety net for the public, right? And the next one very important function of these retail banks is housing finance, right? So uh, if the retail sector in India, the real estate sector in India has grown, it is because of the growth of housing loans by these retail banks. If retail banks had not extensively given home loans and housing loans, then the real estate sector in India would not have grown at the pace that it has grown today, right? So it is not just helping the real estate sector, but it is helping people in order to reach their goal of having a house of their own. Education financing also. See, so many students belonging to middle and lower middle class families are today going to countries like US and UK. Do they all have the required money or the savings with them? No, they are taking education loans. So education financing is also a very important function of retail bank. Right? So these are some of the functions of retail bank. With this, I will stop today's class. Your next class is again on Sunday, next Sunday, that is 29, same time, 1:30.
మేడం వెళ్ళిపోయారా అప్పుడే లేరా